Welcome back to this special chat with Howard Marks, the co-chairman of Oaktree Capital, a company that manages $101 billion of funds all over the world. Mr. Marks, now for some questions on India. I believe you're here on a holiday.
Yes.
But will you think of business, since you're saying the best years are ahead, will you look at it as a business opportunity?
Yes, we will. We will absolutely consider it. I've been impressed with the people I've met here, and I'm impressed with the wonders of the country and the qualities of the people. Okay. So I think we'll take a strong look at it.
Okay. Well, one of the areas where India at the moment is desperately looking for money, and I'm sure your audience would have told you that earlier today, is distressed assets or special funds, special situation funds. There are about probably 8 trillion of bad debt, which is desperately looking for some capital. Is that an area of interest? Did you discuss that with anyone?
I haven't had specific discussions, but I mean, distressed debt is one of Oaktree's fortes, and it's a place where we think we have expertise and could add value. I guess I would say if we're going to get involved with India, which I think we will, there's a better than average chance that it will include distressed debt.
All right, what about crude? I mean, last year, same time, we were looking at crude at $30, and now it's maybe almost double or getting there. Do we go back to the 100 levels? Do we go back to 30 levels? What does crude market look like to you?
You know, nobody knows anything about oil prices. I sincerely believe that. Number one, it's an administered price. Number two, it's very much subject to changes in supply, which are politically governed. You know, look, I guess the easy thing to say is I'd be shocked to see it back at 100, and I would bet that it will not. You know, see, the way people think about things is they say, well, I think that demand is strengthening, or I think that supply is declining, so I think prices will rise. But that they never ask, if you're talking about rising from today's level, is today's level a fair starting point? Now, maybe today's level incorporates expectations of higher demand and lower supply, and so these trends could materialize and the price not change. So, you know, I tell people when I speak to audiences that nobody in the audience knows anything about the price of oil, and neither do I.
Well, that's fair. It's just that India's macros, both the current and the fiscal deficit, are so intimately tied to crude that we could do with some expert advice on crude prices. Well, you have spoken about China in your memos.
Yes.
Do you think that it's going to be an orderly shift? Will China, I mean, it seems to be showing more growth than it did exactly 1 year ago when we all worried about recession. It's an important buyer of commodities. And therefore, are you just confident that its hiccup is over and China will show modest growth?
Well, of course, it has continued to show modest. According to the reports, it never didn't show modest growth. I think you know, I referred to the emerging markets this morning in my talk as adolescents.
Okay.
You know, I believe that the older developed markets are senior citizens. The U.S. is a mature adult. I think that the emerging markets like India and China are adolescents, which means two things. Number one, their best decades are ahead of them. And number two, life will be chaotic. I don't know if you've ever raised a teenager, but I have.
Yes, I have.
And life can be chaotic. And I think that that's the way it will be for China and India and the others. There will be pronounced ups and downs, more than you see in the developed world, but with a positive skew.
Basically, would you say that the United States and the global economy can reasonably expect better growth in 2017 than 2018? Are factors, you know, arranging themselves that way?
I'm not an economist, and I don't believe in economists, as you know.
Yes, I saw a radio memo.
But the U.S. economy does seem to be gathering strength, and from a low level. You know, this has been the weakest recovery from a recession in many, many years. But so it does seem to be gathering strength, and there is the possibility that the administration will do things that are helpful. So there's a chance that growth in 18 will be better than 17.
Well, if that's the case, just my last question to you. What looks like a damn good investment? You know, you play emerging markets to some extent, you play equities to some extent, you play bonds to a large extent, you may be playing gold as well, I'm sure. So what might look like a good investment? My last question to you.
You know, I don't want to throw cold water on the subject, but we are in an environment where we have high uncertainty, high prices, low prospective returns, risky behavior. That's kind of universal and affects all asset classes. And so when I look out today, I don't see any bargains. I don't see anything which is decidedly cheap. I don't see anything which is selling pronouncedly below its intrinsic value. In fact, what we look for is things that are less overpriced than others. And they exist. I happen to still like the emerging markets. I'm a believer. You can't prove that the emerging markets have a bright future. You can't prove that they're a superior investor. You either believe or you don't. And I heard a great quote the other day. A man named Chase said, the believer does not need proof, and the non-believer is not susceptible to proof. So the question is, which are you? I am at heart a believer in the emerging markets, especially having had the chance to visit India this week.
Okay. Mr. Marks, it was a pleasure listening to you, and this last bit of optimism certainly will go very well down with our viewers and with us. Thank you very much for joining us.
Thank you for having me.